In the glamorous, yet unforgiving world of global finance, where fortunes swing in minutes and reputations rise or crumble with a single decision, the most successful financial celebrities share a set of deeply ingrained habits that operate like a hidden operating system beneath their public personas. Habits that explain why some individuals not only accumulate immense wealth, but also endure as cultural icons whose financial philosophies influence millions. Whether we look at Warren Buffett's quiet compounders in Omaha, Ray Dalio's macro-principled empire, George Soros's reflexive intuition, Cathie Wood's disruptive conviction, Mark Cuban's relentless curiosity, or Oprah Winfrey's financial alchemy rooted in authenticity, we find that they are not guided by luck or mere intelligence, but by a set of daily disciplines and mental frameworks that shape their every move. And understanding these habits offers us more than inspiration. It provides a blueprint for thinking like the world's most extraordinary financial minds. The first and perhaps most foundational habit is relentless learning, a trait so universal among financial celebrities that it feels almost genetic. Yet it is entirely self-constructed. Buffett reads for hours. Dalio consumes history with scientific rigor. Cuban devours books and new tech, and Oprah explores human psychology with the intensity of a researcher. This relentless consumption of knowledge is not casual curiosity, but strategic nourishment, because the financial world punishes ignorance swiftly and rewards those who stay mentally agile and informed. From this habit springs multidisciplinary thinking, the ability to see patterns across fields as diverse as economics, biology, engineering, geopolitics, and behavioral psychology. And it is this interconnectedness, what Charlie Munger calls a latticework of mental models, that allows financial celebrities to solve problems others cannot even see. Wood connects genomics to machine learning. Dalio connects cycles to human emotions, and Soros connects political tension to market dislocations, proving that no single discipline is enough to navigate the complexity of global markets. Yet knowledge alone cannot create greatness without long-term vision, the third habit shared across nearly all financial icons. For they understand that wealth at scale emerges not from chasing trends, but from compounding high-quality decisions over decades. Buffett lets investments grow for generations. Oprah built platforms that transcend media eras, and Johnson shapes fidelity across multi-decade horizons, each demonstrating that patience is an economic weapon as powerful as capital itself. But long-termism is not rigidity. It must be paired with adaptive flexibility, the fourth habit, because even the strongest vision becomes a liability if one cannot pivot when reality shifts. Soros famously flips positions instantly. Dalio treats mistakes as data, and Cuban changes direction whenever new information demands it, revealing that humility, not stubbornness, is the trait that protects fortunes from unexpected shocks. Alongside adaptability stands meticulous risk management, the fifth habit. One so fundamental that its absence destroys even the most brilliant investors. Dalio designs diversification as an engineering system. Buffett demands a margin of safety, and Soros sizes bets according to conviction asymmetry, proving that wealth is built not only by making money, but by avoiding catastrophic loss. Yet once risk is controlled, successful financial celebrities focus on building not individual wins, but repeatable systems, the sixth habit, because one victory means nothing without a mechanism to produce more. Amazon's flywheel, Berkshire's acquisition framework, ARK's research ecosystem, and Nasdaq's data infrastructure show that systems, not spontaneity, create long-lasting power. Systems thrive only when aligned with ownership mentality, the seventh habit, because financial celebrities maintain equity control to protect their vision from short-term pressures. Oprah kept Harpo independent. Johnson fortified Fidelity's private structure. Gates built Cascade to steward his wealth. And Buffett never relinquished the cultural DNA of Berkshire, illustrating that autonomy is a form of capital. But capital and systems collapse without emotional stability, the eighth habit. For the financial world constantly tests one's composure. Wood endured severe drawdowns under global scrutiny. Soros faced political vilification. Dalio weathered decades of skepticism. And Oprah survived the volatility of fame itself, all demonstrating that emotional resilience is the silent infrastructure behind every public victory. With stability comes narrative leadership. The ninth habit. Because financial celebrities do not merely invest, they articulate visions so compelling that capital, talent, and trust flow toward them. Buffett's annual letters, Wood's innovation theses, Cuban's pragmatic philosophy, and Dalio's principles each act as gravity wells that amplify their influence far beyond financial returns. Finally, anchoring all these habits is purpose-driven wealth. The 10th and most defining trait, for the richest financial celebrities do not treat money as a trophy, but as fuel for impact. Gates channels billions toward global disease eradication. Dalio funds educational and societal resilience projects. Oprah empowers communities through education and equality programs. And countless others use their platforms to reshape industries, policies, and opportunities for future generations. These 10 habits, relentless learning, multidisciplinary thinking, long-term vision, adaptive flexibility, risk mastery, system building, ownership, emotional stability, narrative power, and purposeful wealth interlock to form the invisible architecture behind every enduring financial celebrity, creating a behavioral engine that compounds influence, opportunity, and success across decades. And as these habits interact, they generate a self-reinforcing loop that elevates ordinary competence into extraordinary, enduring influence. And as this loop compounds year after year, it transforms financial celebrities from individuals with expertise into living institutions whose decisions, philosophies, and psychological frameworks ripple through markets, cultures, and generations. This compounding effect is not accidental. It is the direct outcome of habits that strengthen one another in ways that create structural advantage. Relentless learning sharpens multidisciplinary thinking. Multidisciplinary thinking expands long-term vision. Long-term vision requires emotional stability and risk mastery. Risk mastery enables bolder innovation. Innovation becomes sustainable only when supported by system building. Systems endure because ownership protects them. Ownership gains power through narrative leadership. And narrative leadership becomes meaningful only when guided by a purpose beyond wealth itself. Together, these habits create a behavioral engine that does not simply perform in the financial world. It reshapes it. To see this engine in action, we look at how these celebrities convert habits into strategy. Warren Buffett's long-term value framework works not because he reads or waits, but because his reading sharpens judgment, his patience reinforces discipline, his systems at Berkshire institutionalize that discipline, and his ownership ensures those systems survive beyond market cycles. Cathie Wood's disruptive innovation thesis works because multidisciplinary thinking allows her to synthesize genomics, AI, energy storage, and robotics into a coherent worldview, while emotional resilience allows her to withstand the volatility inherent in betting on the future. Ray Dalio's macro empire thrives because his principles create a system where mistakes trigger learning loops, algorithms enforce discipline, and diversification protects the mission. Mark Cuban stays relevant because curiosity fuels adaptation, and adaptation fuels opportunity in industries that shift too fast for static thinkers. Oprah transforms authenticity into financial power by combining emotional intelligence with narrative mastery, creating a brand architecture that compounds trust, influence, and economic reach simultaneously. These are not random habits. They are components of a single integrated system. What truly distinguishes these individuals is that their habits operate at scale, meaning the feedback loops they create continue compounding even when they sleep. Their systems hire talent, refine data, accumulate trust, attract capital, and extend influence in ways no human could manually manage. Once the system is in motion, their role shifts from operator to architect, from participant to catalyst, from player to institution. This shift marks the point at which a financial celebrity stops reacting to markets and instead begins shaping them. Sometimes subtly, sometimes dramatically, but always through the compounding force of the habits that built their platform in the first place. Yet this transformation would collapse without emotional stability, the silent backbone of the entire engine. Markets punish panic and reward clarity, and financial celebrities are tested publicly, relentlessly, and often unfairly. Their ability to remain grounded during crises, whether facing public criticism, massive drawdowns, political attacks, or cultural backlash, is what keeps their systems intact. Emotional resilience ensures that long-term vision does not fracture under short-term pressure, allowing them to continue compounding where others capitulate. This stability strengthens narrative power, because people follow leaders who remain calm when the future feels uncertain, and narrative power reinforces their ability to attract the partners, investors, and communities that fuel long-term relevance. At the peak of this hierarchy lies purpose-driven wealth, the philosophical anchor that transforms success from a private achievement into a public contribution. Billionaires like Gates, Dalio, Oprah, and Soros illustrate that the most enduring financial celebrities redirect their wealth towards solving global problems: health, climate, education, equity, not for optics, but because a purpose-aligned empire endures longer, inspires more trust, and creates impact that outlives market cycles and personal lifetimes. Purpose provides direction when data is ambiguous, resilience when criticism intensifies, and meaning when success alone no longer satisfies. It is the habit that turns a powerful life into a transformative one. In the end, the top 10 habits of highly successful financial celebrities form a unified methodology for navigating complexity. Learn aggressively, think across disciplines, commit to long horizons, adapt with humility, protect the downside, build systems, secure ownership, master emotion, lead with narrative, and deploy wealth with purpose. These habits do not merely create financial gains, they create architects of influence, individuals whose decisions shape industries, whose philosophies guide millions, and whose systems continue compounding long after they step back from the spotlight. And so the real lesson is not to imitate their outcomes, but to emulate their operating system. For in a world defined by accelerating change, those who cultivate these habits will not merely survive, they will lead.